Tesla's dirty secrets about their profits. Tesla earned its first full year of financial revenue in 2020, but not from consumer sales. By 2025, 11 states mandated automakers to offer a set percentage of zero-emission vehicles. If they cannot, the manufacturers must purchase regulatory credits from another car maker that fits those standards, such as Tesla, which only sells electric vehicles. It's a profitable business for Tesla, pulling in $3.3 billion over the previous 5 years, with nearly half of that coming in 2020 alone. Tesla's $1.6 billion in regulatory credits greatly outpaced its net income of $720 million last year, implying that the company would otherwise have had a net loss in 2020. These folks are losing money on automobile sales. They make money by selling credits, and the credits are disappearing, said Gordon Johnson of GLJ Research, one of the most vocal bearish on Tesla TSLA stock. Hello everyone, and welcome to another video on our channel. In today's video, we're going to discuss Tesla's dirty secrets about their profits, so stay tuned to find out. Now let's start our video. Tesla officials admit that the firm cannot rely on that funding source indefinitely. This is always an extraordinarily challenging area for us to anticipate. Tesla Chief Financial Officer Zachary Kirkhorn said, "Regulatory credit sales will not be a substantial component of the business in the long run, and we do not structure the business around it. It may continue strong for a few more quarters. It's also possible it isn't." California, Colorado, Connecticut, Maine, Maryland, Massachusetts, New York, New Jersey, Oregon, Rhode Island, and Vermont are among the 11 states that will require a certain percentage of cars to be zero-emission vehicles or require automakers to purchase credits from a company like Tesla that has exceeded the target. Tesla, like many other firms, discloses additional profitability metrics, and by those standards, the earnings are large enough that businesses do not rely on credit sales to be in the black. The corporation announced a $2.5 billion adjusted net income for 2020, removing things such as $1.7 billion in stock-based compensation. Its automotive gross profit, which compares overall income for its automobiles business to expenditures directly related to car manufacturing, was $5.4 billion even after accounting for regulatory credit sales revenue, and its free cash flow of $2.8 billion was up 158% year over year, a stunning reversal from 2018 when Tesla was burning through cash and on the verge of bankruptcy. Its proponents argue that these metrics demonstrate Tesla is now profitable after years of losses in the majority of them. One of the reasons the stock has fared so strongly for more than a year is its profitability. However, the discussion over whether Tesla is profitable has devolved into a holy war, according to Gene Munster, managing partner of Loop Ventures and a top tech expert. They're debating two separate issues. They'll never reach an agreement, he predicted. Munster feels that opponents are overly concerned with how the credits continue to surpass net income. He believes the automobile gross profit margin, excluding regulatory credit sales, is the strongest indicator of the company's financial success. It's a leading signal, he said, of that metric of Tesla's profit. There's no way GM or VW are generating money on that basis with their EVs. If you're liking this content so far, please consider subscribing and liking the video. Now let's continue. Tesla's stock is up 743% in 2020, making it one of the most valuable U.S. firms in the world. Nonetheless, the 500,000 automobiles it sold in 2020 represented only a portion of the expected 70 million vehicles sold worldwide. Tesla shares are now valued about the same as the aggregate value of the world's 12 top manufacturers, who sell more than 90% of vehicles globally. What Tesla has that other automakers don't is rapid growth. It forecasted 50% annual sales growth in the future years last week, and it expects to perform even better in 2021, while other automakers struggle to return to pre-pandemic sales levels. The whole industry is heading toward an all-electric future, partly to fulfill harsher environmental requirements throughout the world, and partly to satisfy the rising demand for EVs, which require less labor, fewer components, and cost less to produce than traditional gasoline-powered vehicles. Most people can agree that EVs are the future, Munster added. I believe that is a safe assumption. While Tesla is the leading manufacturer of electric vehicles, it is facing greater competition as nearly every car maker is launching or planning to launch its EV. In much of Europe, Volkswagen has surpassed Tesla in EV sales. GM stated last week that it intends to transition to zero-emission vehicles by 2035. The competition is making Tesla's cars obsolete, GLJ researchers Johnson remarked. We do not believe this is a viable business strategy. Other experts believe Tesla's stock price is appropriate, considering how the move to electric vehicles would benefit the company. They're not going to maintain their 80 to 90% market share in the EV market, but they can continue to expand, even with a considerably reduced market share, said Daniel Ives, a technology analyst at Wedbush Securities. We're looking at 3 to 4 million vehicles per year in 2025 and 2026, with China accounting for 40% of that increase. They are now on a path where they will be profitable, even even without EV credits. That's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to provide us with your valuable feedback. We'll see you in the following video with some more notable celebrities, facts, and stories. And until then, stay tuned.